The following is a presentation of TFNN. The Morning Markets Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Monday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets picking things up, I should say, in negative territory after quite the week last week. Quite the acceleration. Markets on Friday hitting 4109. Quite a sell-off in the markets. These are 5-minute bars. Let's zoom in on Friday's action to begin with. About 3:30 in the afternoon, you're at 4105. A little bit of a sell-off into the closing bell. Still a strong day, strong week last week, but today we pick things up in negative territory. There's your 6 p.m. open, pretty much flat for the markets, and it's been a slow and steady run to lower prices. We make it to 40.40. My dad loves that number 40. That's his favorite number, maybe. 40 is where we make it to. Early this morning, we're up a bit. We have another important week of earnings, and more important probably, a Federal Reserve meeting begins tomorrow. Announcement Wednesday, 2 p.m. Eastern Time. Press conference to follow, 2:30. Market expecting a quarter-point hike. What are they going to say about going forward? We'll talk a little bit about the Fed, of course, as we go into the program. We jump around the markets, though. NASDAQ 100, you're off by more than 1.1%. We get Amazon earnings. We get Alphabet. We get Snap. Excuse me. Is that right? Let's check it out right now. Well, you know what? I'm going to do the wrap-up, and then first we'll jump into it. Crude. You talk about a sell-off on Friday, extending that sell-off yet again. We had a 77 handle down from 82.50 on Friday. We're sitting right now down $1.33 at 78.36. Gold contract this morning holding up pretty well. 19.44. We're negative by $1 on the session. Notes and bonds. You're talking about lower price and higher yield, and right now that's putting us at a 10-year right now, 3.546. We'll call it 3.55. You check out the 10-year on the daily, backing off of the recent highs that we just had of a 116 handle. We're trading at a 114.11 handle right now on the 10-year, and as I mentioned, about 3.56%. The 30-year right now, negative by 8 ticks, pretty much the same as the 10-year. Usually they're trading about 1 to 2 times a multiple on the 30-year versus the 10-year. So we have the 30-year moving ever so slowly, only down 8 ticks at 129.29. We jump over to the VIX Volatility Index on some negative market action. We're still under 20. The market clawing back 10 S&P points from the lows, so we were above 20, 1974. All things considered, pretty low relative VIX compared to where we were for most of last year on some of the spikes. Dollar index, DXY, sitting at 101.90. You take a look at the dollar index on a daily, just chopping around near that 618 of the entire move higher from 95 and change to almost 115, above 115 for a couple of the spikes. We jump over to the Euro-US dollar right now. Euro-US dollar, yeah, pushing about 109. You got the euro, you got the dollar chopping around a little bit. We jump over to the yen as we finish up the wrap-up. Yen right now sitting at 130.12. All right, as we have the markets trading lower now, all things considered in terms of the context of where we are, folks, sitting again right at the 618, basically, this move lower. 43.18 down to a low of 3,600. You've clawed back 400 to 500 points, depending on if you grab the spike low of 35.02, sitting at 4,055. And let's jump around to a couple of articles. So we're going to jump to Morgan Stanley. Wilson, right? He's been out there a lot, man. But I do agree with a lot of what he's talking about, and he's been correct many times over as we've made our way through this pandemic. So this, according to Morgan Stanley strategist, better price action in stocks has started to convince many investors they're missing something, compelling them to participate more actively. This is the team led by Michael Wilson. We think the recent price action is more a reflection of seasonal January effect, short covering after a tough end to December and a brutal year. In reality, here's the part. Earnings are worse than expected, especially on the margin front, they said. Secondly, investors seem to have forgotten the cardinal rule of don't fight the Fed. Perhaps this week will serve as a reminder. So we come into a Fed meeting, of course, this week. A Fed that's unwilling to pivot to a more dovish stance, coupled with the reality of the worst earnings recession since 2008, is being mispriced once again in our view. He said, we think this should lead to the final leg of this bear market in short order. Short order, folks. JP Morgan strategist also said investors should sell the rally even if the markets keep moving higher. Fundamental confirmation for the next leg higher might not come, and weaker earnings as well as activity could weigh on equities, and that's a team led at JP Morgan as well. You jump from that story, and I was reading about this morning. Yeah, this one here, right? Yes, Fed debates whether wages or low unemployment will drive inflation. Nick Timiraos, is that how you pronounce it? Covering a lot of the Fed, potentially, getting a lot of good intel on the Fed and having some good stories that have driven some of the action in recent months. And what is some of what you talk about here? This is the whole dynamic going on, okay? At issue is what's the right way to forecast inflation? A bottoms-up analysis of recent readings on prices and wages that puts more weight on pandemic-driven idiosyncrasies, or traditional top-down analysis of how far the economy is operating above or below its normal capacity. So some inside the Fed, including its influential staff, put more weight on the latter, okay, which would argue for tighter policy for longer. Now, where this gets into, of course, is employment. So they're going to hike rates by a quarter point on Wednesday, okay? The workhorse models that Fed and private sector economists use to predict inflation compare the country's total demand for goods and services with their total supply as represented by the output gap. The difference between actual GDP and potential based on available capital and labor. They also lean on the Phillips curve. Okay, estimating these variables is difficult even in normal times, let alone at what's been going on with the pandemic and the Ukraine. A natural unemployment rate can only be inferred from the behavior of prices and wages. Now, a decade ago, okay, Fed officials were putting the natural unemployment rate at between 5 and 6%. That's already been revised down to 4% as actual unemployment fell below that level, okay? And here's kind of why I wanted to cover this, and we'll probably, you can take a look at this, okay? The jobless rate has fallen. So here we have the unemployment rate, the lighter blue with the spike on it. And here you have the Fed's officials' median estimate for the natural rate of unemployment. Well, folks, what's going on is the unemployment rate keeps dropping. The Fed officials just keep dropping the natural unemployment rate. And you have the staff, okay, wary of pinning too much at one point on output gaps in the Phillips curve, okay? But then you also have that higher wage growth boosts aggregate incomes, providing spending power that can sustain higher prices. Officials worry tight labor markets could allow paychecks to rise in lockstep with prices. And that could push them, okay, to watch those numbers and potentially stay the course for a higher, longer, if those are going to persist. And maybe you're seeing some of that come to light right now. With the S&P starting things off down 30 points right now. We got a big week of tech earnings coming up. We're going to talk to our man Kevin Hincks when we get back from the break. We got the S&Ps down 0.75% to kick things off right now, trading at 4,053. NASDAQ 100 off about 140 points right now. You got the Dow off 135. Russell off by 60. And how about that crude contract, man? You talk about a drop-off this morning from about 79.75. Oh, excuse me. Trading down to 78 bucks. We're trading at 78.54. Stay tuned, folks. We'll be coming back, and we'll finish up this conversation talking a little bit of Fed. Not a very important week. We got a Fed meeting this week. Next meeting, not till March after that. One after that is May. Fed officials meeting, announcement on Wednesday. We'll go over some of the earnings coming up as well. Stay tuned, folks. Lots to talk about on Monday. We'll be right back after the break. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 31 points right now. Getting back to that article that I was talking about from the Journal. So some of the numbers that they talk about here are pretty interesting in terms of the expectation for the natural unemployment rate, how that's tied to growth, how that's tied for the labor market, et cetera. Okay? So we talked about the kicker of all of this, right, is that it is so difficult to estimate all of this stuff. And they're all estimates when you go to these types of analysis and percentages. Okay, the natural unemployment rate, the Fed put between 5 and 6. Right now it's at about 4% right now. Okay, we have the blue with the natural unemployment rate with the Fed officials' median estimate of the natural unemployment rate and where we actually are. Okay, so minutes of the last month's Fed meeting show that central bank staff economists think the natural rate may decline slowly, okay, because job matching will remain inefficient, suggesting price pressures could persist for longer than previously thought. The staff also revised down estimates for potential output because of tepid labor force growth, leaving actual output even further above its sustainable level. And the staff saw this output gap persisting until the end of 2024, a year longer than they projected just a few weeks earlier. This is in the minutes, I'm assuming compared to the prior minutes of the month prior. The staff is telling the committee you can't give up now because if you do, it will remain significantly above 2%. And if wages continue to grow at their recent rate of 5 to 5.5%, that would keep inflation well above the Fed's 2% inflation goal, assuming productivity grows between 1 to 1.5% a year. This is why the Fed's policymakers last month revised higher their projections for inflation this year. Higher wage growth boosts aggregate incomes, providing spending power that can sustain higher prices, and officials worry that tight labor markets could allow paychecks to rise in lockstep with prices. That's one looming that we really haven't seen break, nowhere near the 2% level that we need. If wage growth slips to 4%, as they put it, that's going to make things a lot easier. If you get a boost of supply in workers, okay, would help allay that. You have labor shortage could ease as immigration rebounds. Last month, Census Bureau, let's see, estimate showing net immigration for the 12 months through June topped 1 million for the first time since 2017. And the Fed officials closely watch the employment cost index because it's the most comprehensive measure of wage growth. And those numbers come Tuesday. Yeah, so we got a lot coming out. But keep your eye on that number, and we'll see how the market persists today as you come up to a Fed meeting, because there's a lot of realistic stuff in terms of what they're talking about there, tied in with what Morgan Stanley's Wilson is saying as well. All right, we have a caller. We got Jose in Lakeland. Jose, good morning. Do we have Jose?
Let's make some money this year.
Let's make some money, baby. What are we doing? What are we looking at?
Hey, with all this Fed talk, it's interesting. But when you synthesize it all, are we talking about leaving rates higher longer? Isn't that what it comes down to? Is that what you're saying?
Probably. It's pretty interesting that you got to go out to May. We're going to get, I think it's pretty destined that we're going to get 25 right now. We're probably going to get 25 maybe one more time. But we do have all the way until May outside of those two meetings where we're going to get a lot of data. So it probably decides what that data looks like before the May meeting, whether maybe they go one more or stay. And I think if they stay, the whole talk of cutting, man, is pretty ridiculous when you think, I mean, it's, we're obviously in a restrictive rate policy, probably at the interest rate they're at right now, but they don't want to wait forever, and that seems to where the market's going to go. But sitting at 4,000 and change in the S&P is not that bad, man, depending on, there's a lot that has to happen before they'd ever think about cutting right now. And maybe we get there, man, but we're not there yet at, 3.5% unemployment, whatever it is.
Right. Yeah, I think they're going to be making the decisions strictly on the numbers, each month's numbers, PPI, CPI.
And we got a lot of those numbers before, that May meeting. We had a meeting in March as well. But it's pretty interesting when you go that far out, right, man? It's like in terms of, you're going to get January, you're going to get February, you're going to get March. Do we get April before then? We might get 4 months of data. I got to look at it. But that's a lot of data that we're going to get outside of maybe this 25 hike and maybe one more,
Right. So Apple, I guess, reports Thursday. It's kind of suicide to go in and unless you're on both sides of the trade, probably not a good idea to short Apple here, even though a pullback is imminent. You got to like the levels that we're at in terms of risk reward market wise. I think in terms of if you're going short, in terms of the risk that the market accelerates higher to 4,200, 4,300, the Fed could always come out and surprise everybody, of course, folks. But we got a long way to go. You got to move right now. Let's see. What are we looking at? We're not open yet. Let me just look in terms of what type of volatility we're pricing in. So you're looking at $6.75 of implied volatility for this week in terms of the move. You pull up the chart of Apple. We're down a bit today. You drop off from 146 to 144. Not sure if that's just a market reaction. Why are you thinking about going short Apple? Is this a market play or an Apple play in particular? Well, I see that their numbers probably going to come in okay, as they always do. They never seem to miss. I've never seen them miss a number. But I just have a suspicion they're going to sell it off, even on a decent number, the meet or beat.
What you do have is this thing just traded from 124, to 145 to 147 almost. What is that? You're talking about, $20, 15, 16, 17% almost over the last 25 days. So in that respect, I hear you. I was listening to an analyst earlier this morning talking about, is Apple going to cut people? And they were talking about, well, even if they don't cut, there's ways to cut people in terms of they're already trying to bring people back to the office, right? You impose those types of restrictions, as in everybody's probably going to cut. Apple's probably going to cut in their own way, even if it's just clamping things down a bit. It's tough to go short on Apple, man. That's all I'll throw into it. Yeah. But anytime you're up 20 plus dollars, there's probably a lot of optimism right now built in when you're up 16% off of where you were, 20 days ago or something like that. So in that, yeah.
Right. Yeah. No, I think it's dangerous ahead of earnings to do anything ahead of earnings. But
we know they're a super strong company in the long run. right? So that's the tough part. That, it's like going short that day, and we've seen. I get the chart up here, man. It's looked like this thing runs from 130 to 175, like it's nothing, just over the last year.
Yeah.
So sitting at 145, I'm not sure, but market-wise, man, I really feel like coming in that it's just going to be tough to have a lot of optimism in the market. Sitting above 4,000, you can have optimism in the market, but when you get these types of rallies, and Apple hasn't. Apple's not back at 175 where it was in August, but we're sitting above 4,000 in the S&Ps right now, man. That's not that bad considering, I think, what the Fed has to do. I mean, you heard the conversation about the wage market, man. We got unemployment at 3.5, 3.6%. I feel like that's going to eat at Chairman Powell a little bit as I try and digest that. It's like we're really going to have to see. We might pause, but that number is really going to have to change, or the inflation numbers are really going to have to come down. And that's tough, man. That's going to be tough.
Hey, let me ask you a question. Powell made a comment last month. Every time the stock market rallies, it's just going to make it more painful later. So to interpret that, is he saying the easy money filling people's pockets is putting price pressure on prices from the stock market? Is that what he's talking about?
Listen, hang with us for a second, okay, Jose? Because we'll finish it up, but that's exactly because they can't. That's not the goal of what they're doing right now. Stay tuned, folks. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P down about 26 points. That's negative by about 2/3%. You got NASDAQ 100 down about 1% right now. We're talking with our man Jose for Lakeland. And Jose, you were talking about Chairman Powell, right? You were talking about saying the market going up. Is that a bad thing for them? Here's where I go to it, the extra thing.
Yeah.
I especially, right, if it's been going up recently on the premise that they are going to potentially be cutting later this year, or all financial conditions potentially easing on expectations that don't line up with the Fed, right? This hasn't been a huge earnings beat growth rally. It has kind of been something on inflation numbers maybe abating a bit, and the market taking that and saying, you know what, things are going to roll over. We have a recession. The Fed, they're probably going to be cutting later this year, and the market is going up to a degree on some of that number, and we come into another important week of earnings. But that kind of defeats the whole purpose, right? In terms of financial conditions seen easing, allowing for companies to see those conditions easing, rates coming down, the cost of capital going down, allowing them to grow, et cetera, right? So that's where I'm like, yeah, that's probably not good if they're still worried about inflation, which they probably still are. So that's kind of...
Yeah, I thought it was a peculiar statement he made. Hey, on a lighter note, the teams are in place. I guess there's going to be a whole lot of betting going on in the next few weeks.
Yeah, that was quite a football game last night, man. And if you saw it, folks, it was a fantastic game. And the Chiefs are going to the Super Bowl over the Bengals. And it was a tough one to get decided on, a tough penalty at the end. But, man, it's amazing how those moments just are so much. I said to a friend, and if you saw it, folks, it was a late hit out of bounds on Mahomes. And it was a 15-yard penalty right at the end of the game, and it put him in field goal position, and Chiefs kick it. I said he probably doesn't make that mistake in the first quarter just because it was so much that moment. But, man, that's how it goes. Yeah, there's going to be lots of gambling.
I didn't know the particulars on it. I just saw the score this morning. I had the Bengals to win it all, but
they were. I thought they were going to. I was telling my dad I thought they were going to do it.
I'm at the bank in line. I'm at the line at the bank here, and a guy says to me he had a miserable month. Last month was miserable betting. He said he lost 12 out of 12 in baseball, 10 out of 10 in soccer, and 8 out of 8 in basketball. I said to him, "Well, there's a hockey game tonight." He looked at me, and goes, "Hockey? I don't know anything about hockey."
Yeah, as long as the action persists, right? And hopefully they listen. It's. I come from playing poker, man. You can do things at a plus EV calculation, folks, but sports gambling probably not one of them for many people. Doesn't mean you can't place $10 or something like that on it. Hey, what do you think of the market out here in Lakeland, Jose, man? What do you think of the real estate market? I hear you call my dad occasionally, picking his brain, but what do you think? I mean, you know, I'm around this neighborhood. We got some huge developments going on. What's your take on the market right now out here in the middle of Florida?
Well, I mean, I built 2 years ago. I had a small custom home, track home builder in Lakeland, a local guy, build a bungalow. Man, he only charged me $115 all in, turnkey price, and I dumped it for $290. I've got a couple going in Spring Hill, but out in Davenport, Claremont, Haines City, up and down US 27, all the way to Claremont, they are building so many townhomes out here. Starlights, all of them are out here building. You can't even move with traffic. It's not going to be a good scene. So okay. I'm like everybody. I'm hoping things come back strong. I'm just hoping things come back strong. That's all I can do.
Yeah. No, it's interesting, man. I mean, I'm not sure if you've heard me, we have a development of like 1,400 houses going up, and they're moving people in, man. They're moving people in. I see them moving in at a remarkable pace, which is interesting, you know, in terms of just pushing people into those houses, and it's happening, even with rates where they are. So, yeah.
Yeah, look, you asked the question. Home builders have stopped building, but Tom says that they have homes unfinished. There's going to be a lag time. But I think that gap is going to be filled with foreclosures. They may have stopped building, but I think the inventory is going to increase drastically with just foreclosures. I think that's going to dampen the price picture a little bit. I don't like to see that, but there's so many people wanting to move down here.
Yeah, there are. We're very fortunate to have that wind at our backs, man, just nonstop, and that's not going to stop anytime soon, for sure. I saw something, a friend in one of our chats. I'll see if I can pull it up maybe after the break, talking about, I think, Blackstone issuing eviction notices or something like that. And you have those types of Blackstone, filing eviction lawsuits, hundreds of tenants, and moving on from the pandemic era forbearance program. So I'm sure that's going to play out. But that's talking about Georgia and Florida. And that's, I'm reading that off of a friend's shared of whatever news article, but it makes sense, right? It does, as we come out of that period.
Yeah.
Well, Jose, I appreciate it, man. I always appreciate the call. I hope you have a great Monday, man, and call again.
All right. Thank you. Bye-bye.
Take care, man. Folks, call in. I always appreciate it. Our man, Jose, 877-927-6648. And it's interesting how there's going to be pockets across the whole country in terms of how that real estate market progresses, just like there has been over the last 2 to 3 years. And it doesn't mean everything has a little bit of a pullback. It does not mean that's not going to be the case, as in it may be. It is the case. But there's differences in terms of people, where you are. And Florida, folks, it's a beautiful spot to be. Come on down. We had Gasparilla this weekend. I made it over to Gasparilla. Maybe I'll see if I can pull up a picture of Tommy and I from Gasparilla. We saw some parade floats. Now, if you're not familiar, folks, Gasparilla is the pirate invasion. There's a parade, and it's a huge celebration in Tampa. They bring in the boats, and then they got a big parade, and it's a big party. There's a lot of alcohol involved, for sure. I'd say I was talking to my mom this weekend, saying it's kind of akin to the St. Patrick's Day parade in Boston, in good old South Boston. But it was a great time, and they actually do. So they have Gasparilla this past weekend that was just, we passed. Weekend before that, they do a kids parade, though. No alcohol there. So it's good they do it on both because it's so cool. Kids love parades, right? And it does turn into such a big party that they do both. And maybe South Boston. Maybe you need 2 St. Patrick's Day parades in South Boston, right? You got a kids parade and then the adult parade. Because the adult parade, man, it's an adult parade in South Boston for sure. It's a kids parade too. I loved it. But there's a lot of alcohol involved in the parade in South Boston for St. Patrick's Day. Good old Irish celebration. All right. Back to the markets, folks. We got the S&Ps right now. Down by 25 points, catching a bid on the open for a bit. We're up by a few points from where we opened right now. NASDAQ 100, though, a little bit of a sell-off. We're down 1.2% right now. Dow off 68 points. Let's jump around to some of those FANG stocks. Apple shares down about 0.8% right now. Amazon drops ahead of their numbers. Now, let's jump over. We got Amazon. So they're out with their numbers on Thursday. Yeah, my son's birthday, Tommy. He'll be 2 on February 2nd, 2-2. He'll be 2 on February 2nd. Fast 2 years, man. Amazon, they're out with their numbers. You're talking about an $8 move for their numbers. What else do we got? Is it Google, I believe? Amazon and Alphabet? Yeah, Alphabet. Amazon and Alphabet, both on Thursday. Alphabet, you're talking about a $5.23 move. I know we get Snapchat earnings. They'll be out with their numbers Tuesday. There's a move for you. How about a 21% move for their numbers, man? You're talking about $2.18. You take a look in terms of where we are on the weekly. $2.30 of volatility for an $11 stock. You're up by 1% today so far on a down market. Now that's an interesting one, man. You talk about volatility. That's almost a 20% move implied in either direction, folks, coming into their numbers tomorrow. Stay tuned. We'll go over some of the other equities with their numbers. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got markets right now in negative territory. S&P's down about 24 points right now. Jumping back to the three stocks that we got on Thursday. Okay, we got Amazon with their numbers. I covered two of the three. I was jumping around. We got so much action, man, and they all start with an A. Amazon, Alphabet, and Apple, all on Thursday. So Amazon, you're talking about an 8% move in either direction. Apple, you're talking about a $6 move, so almost a 4% move. 144, $6 move priced in. And then Google, Alphabet, we're talking about a $5.24 move priced in for their numbers on Thursday. Talking about other companies, we got Meta with their numbers on Wednesday. Facebook, there's some volatility for you. About a 9% move priced in either directions. Facebook, well off the lows of $88, man. You're up at 150 right now. But they'll have their numbers on Wednesday. We got Peloton. What's Peloton been up to? 666 for the low. Watch out for Peloton shares. Trade night now at 1310, coming up to the highs we had, 1333. Watch out, folks. I mean, we're coming up to an area of resistance back in December. Similar area of resistance all the way back in August, up at 1432. That's also an area that you first came crashing down to. Right? The high of the low, 1348. Sitting at 1311. What are we talking about right now? We're talking about a company that is valued at $4.4 billion. That's quite a company still. At this price tag, you back things up. Yeah, from 171 down to $6 and change. We're sitting at $13. Still well below the pandemic lows of 1770. I'd be careful of that one coming into their numbers on Wednesday, man. You've already doubled in terms of their value off of the lows that we had. Yeah, and you're well off of where we were coming into this year as well. You're talking about a $4 to $5 billion company right now. That's not a valuation, not a bad valuation considering the business model they're now going to. Far different from taking over the world, which was their original plans. And what else do we get? We get Snapchat with their numbers Tuesday, I believe. Jumping over to Snapchat. Yeah, they'll be out with their numbers Tuesday, and as we mentioned, about a 20% move almost. You're talking about a $2 move, Snapchat off of the lows of $7, but boy, you could say just consolidating for the better part of really since July when you came crashing down to $9.91. You make it to $7.33, the earnings season after that, and this is the one that follows that, man. So, I mean, check out their last earnings numbers, folks. You go back to April. in the middle of a quick descent. You go back to July, things dropped from a price point of $16.55 on that bar down to $9, down to $6. Is that right? $6? No, excuse me, down to $9. Yeah, and then you make it to $7.33 on the following one. We're back at $11 right now. All right, what else we got pulled up here? Let's talk about some of the chips. Yeah, we'll talk about some of the chips. Take a look at Micron. Well off the highs of $100. You get cut in half to 50. We're up a bit. But yeah, this article from Bloomberg talking about the historic crash of memory chips. Failing gadget demand dealt a massive blow. You get companies, whether it's Hincks, not familiar with them, but Micron, and the chip industry is bracing for Samsung's earnings tomorrow. Now, Samsung, they indicate, at least in this article, is that they may make it out fairly unscathed. They're got a diversified, what do they say? The heft in diversified business. Samsung looks to be the only one that will escape relatively unscathed. But even they are headed towards losses. And look at the supply we're talking about here. So you got Hincks in the black. You talk about a supply glut, man. Samsung in the red and Micron in the blue. And Micron has responded aggressively to plummeting demand. They said late last month that it's going to cut its budget for new plants and equipment. It's amazing, man, how it's, talk about ebb and flow, right? The rate at which the industry rights itself would depend on how quickly the company's counterparts make similar moves in terms of decreasing that supply glut. Every one they're making right now is a loss. Samsung and its rivals are losing money on every chip they produce. Their collective operating losses are projected to hit $5 billion this year, and inventories have more than tripled to record levels, reaching 3 to 4 months worth of supply. Now, what should that do? That should be deflationary. Chips are going to be pretty cheap on the regular. They're basically in everything, but nonetheless, not a good thing for those chip makers. And on Micron, quite a bit off the $50. When are they coming out with their numbers? Let's see. All right, all the way into late March for their numbers for Micron. All right, what else we got pulled up here? Yeah, let's talk about this one on gold. They're talking about gold. Now, this one is John Stepik, and he's talking about the UK, okay? But it is interesting. It's near a record high. Here's how to invest. Where is it near a record high? Is it a record high? Gold is near a record high in the British pounds. Yeah. Sterling. We're currently just under the 1580 ounce, which is the record intraday high for gold price in pounds. If you ever put gold in other currencies, folks, man, the dollar was just so strong. It's changed a little bit on the dynamic recently. But yeah, it's pretty interesting when you look at where they are in terms of where gold is versus other currencies, especially when you took a look at some of the yen at some of those peaks. Nonetheless, though, gold, I mean, you talk about coming into an area, man. We did make it as to a high of 2,078, but all things considered, we're kind of into this consolidation area, right? That's from basically a year ago, February 21st. You make it up into that level. We were there for 2 solid months. This is a weekly. Got almost 8 bars at that price level. Kind of the similar area that you were back here in August, so it would make sense. Maybe we get a little consolidation before the next move here at 1941, because yes, we got a spike to 2089 in late 2020. We got a spike to the 2078, okay? But those are brief spikes, and for most of that period of time, we had a consolidation between about 1900 and 2000 in the price of gold. We're now right back into that level on that gold contract. Let's jump over to the dollar index. DXY. I mean, a lot will depend on what happens with the Fed, what happens with rates, where we are. Right now, the dollar index kind of sitting right near the 618 of this run higher. Pretty remarkable how quickly we give back a lot of that move from 95 up to 115. We're right back to 101 right now on the dollar index. Let's jump around and see how some of the other equities are trading right now. We got Tesla. Now, this one, folks, I'm going to put it on daily. Tesla right now basically flat on the day. I was looking at this last week, looking at it continually, right? Where are we? Yeah, we're right in this area of potential confluence, folks, all right? You take the move that it recently had, as in the move lower, the trend from December 1st down to the recent lows. And the 618 of that move is 162. You take the larger move from September 21st. Your 382 is at a price point of about a 180. That gives you an area of confluence between the 382 and the 618. It's a wide area of confluence, okay? It's nice when they line up a little bit closer, potentially, where you have a nice area that you can initiate. In this one, you're talking about $20. But boy, you just take off where we're talking about right here. Hold on one second. Because all we're back to is the 382, folks. And that's the bottom line. You're down to $100, you're up to 180, but this is only talking about a move that took you 3 months down. It's been about a month back up. We're sitting at the 382. It's also an area consolidated a bit. So don't get lulled into that one, man. Tesla is still dealing with multiples that are fantastical versus other car companies out there at the same time as you have those other car companies coming for the same market that Tesla has driven to the forefront of the auto industry. All right, folks, we got markets clawing back some of the losses. S&P is only down by 14. That's quite an acceleration, man. We're up by 30 points off of the lows we were at about 6:30 this morning. Stay tuned, folks. One more segment. Don't go away. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&P right now negative by 23 points right now. You're looking at a NASDAQ 100 off by about 1.1%. Pretty remarkable what's going on with Bitcoin, man. I can't explain it, but nonetheless, we're up $85 right now. I was going to say ticks. These are dollars, man. 23,405. You just look at this chart, man. First of all, the bright blue line on this chart, that's where Bitcoin went live on CME futures December of 2017, I believe. So you come into the FTX debacle, basically where it went live, pretty remarkable, right? And you almost do it 5 years to a T. It goes live on futures trading, and 5 years later, you get the Ponzi scheme exploding at the same exact price level, huge volatility in between. Then you spike down to 15,000, and within a month or two, you're trading actually higher at 23,400. Bitcoin, quite a tear recently. Ethereum, pretty similar. Not quite over those levels, but you got all the losses back to about 1,600. Now, again, interesting, right? And folks, it's a finite market in Bitcoin. You're seeing the cream rise to the crop, as in everything else that's basically crap, worthless. NFTs especially so. All of that stuff trading back. Maybe everybody that was thinking about selling Bitcoin sold, man. If you were thinking about selling Bitcoin, you sold. If you got it in your account, you're saying, I'm just gambling it up. It's free money. We'll see where it rests. It's at 15,000. I'm going to hold what I have. And if no one's selling, you got to buy from somebody. But it's all still based off nothing. So take that for what it's worth, sitting at 23,400 for Bitcoin shares. S&P down at 21. Let's jump around to some of the companies with their numbers on Thursday. We got Apple deteriorating a bit, down a full percent right now for Apple shares. Google down 1.75% right now for theirs. Amazon shares off 1.2%. Tough start to the week. Meta off 0.5%. S&P's off about 16. We get earnings kicking it off. Fed meeting in between. Thanks for starting your week off with me, folks. Live programming. Everyone's back today. We got our man Basil Chapman next. Have a great Monday, folks. We'll talk to you tomorrow. Stay tuned for Basil.